So depreciation, as I told you, when you are going to do, you have learned depreciation from your 11, 12 in your accounts. For the time being, just keep it aside because that depreciation and this is going to be different. So therefore, what I suggest is that for the time being, ignore what you've learned and look at it in a different perspective. That is the best way to understand because certain things are different here. So to that extent, you have to be careful. As I discussed in the last class, there were certain blocks of assets which you need to keep in mind because that compartments are required. What are the blocks? 5% block, 10% block, and what is the next block for this? You remember? What is the next block for building?
No.
You look at your
40%.
40. 40 is for one which are earlier it was 100, so they have reduced. These are temporary structures. We'll come to plant and machinery, then this one is 10% and intangibles is 25%. What are the other things here? The other things here are 20. See, the way I am writing, please understand like this: 20, 30, 40,
45.
45. And if it doesn't fall under plant and machinery, doesn't fall under this, then
50%.
15% plus motor cars,
Car.
motor vehicles. These are how you have to understand. And under this 40%, you will get computers. Earlier it was 60%, now they have reduced it. So depreciation rates have been reduced. The idea is that probably they want to reduce the depreciation because the rate of taxes are also coming down. These are all benefits that are given. Better to reduce these things. That's probably the idea. Okay? Or rather, we can say that earlier it was getting over in faster time. Now they're saying no, you can use it for a longer period because of improved technology. But temporary thing also they're saying maybe 40% down because it used to be 100%, they've reduced. So let's move on from here. What are the other things? There are certain definitions. I'm not going to go into really details, but particularly one I need to mention here, though it's not mentioned, it means actual cost of asset to be assessed reduced by that portion of the cost of asset, if any, as has been met directly or indirectly by any person or authority. Actual cost includes all expenses incurred in acquisition of the asset, like trade, traveling of staff for purchasing the asset installation. This we know, this is a normal thing. Only one thing that you need to remember is that if any payment has been made greater than for 10,000 in cash, that will not be considered for purchase of actual cost. That is one dangerous thing. In fact, from audit point of view, also we are very, missing it out, and it's very difficult to tell the clients. You see, this is the problem. It's very difficult because normally 10,000 and more expenditure is not allowed. We know that, but this, what happens is that if you are making a payment, it will not be entitled to be called as actual cost. As a result, depreciation to that extent may be restricted. Okay. Just take this has come some recently only, so be careful in the exam. Also, there is a possibility of asking this. Okay. Then it says about where any amount is paid or payable as interest in connection with the purchase of an asset, so much of such interest amount relating to any period after the asset is put to use shall be not be included. That means we'll look at it again a little later, but try to understand that if interest, for example, you are constructing a plant and machinery system, you have borrowed loan for that, or for that point a building you are using it now, or better to use plant and machinery because building you will again think about house property. Don't look at it. This is for primarily for the purpose of business. You are installing a plant and machinery, and you have taken a loan. till the date of putting it to use, the interest you should not supposed to be charged to P&L. Though you got a P&L because you are a running business, but yet what will happen is that you should not be you know charging that to your P&L account. So let us imagine that you have got a for clarity. I am just telling you because these are very fundamental things, but yet you have to be careful. This will be referred to even later on also under 36(1)(3) section. So this is the plant and machinery you are constructing. Suppose you started construction on 1/10/18. It continues. Finally, on 1/5/2020, it has been complete and put to use. Complete, not only complete, should put to use. The put to use thing is very important in claiming depreciation and income tax. So once it is put to use, after that also loan is not repaid. Therefore, for this period you have taken the loan from this period, say, and it is continuing loan. That therefore interest is being paid. So interest paid up to this period should be capitalized as part of the asset and should not be charged to P&L. P&L you are still having because it's only one asset, the plant and machinery you are doing. You've got other business running, all the business running. This is an additional asset that you have put in. So interest up to the date of putting it to use will be capitalized only after being putting it to use. Whatever interest if it there is there, unless you have done a repayment, will be charged to P&L, normal charge. It's an interest cost expense. Therefore, you have to understand that to the extent of the interest prior to putting it to use of an asset, specifically if you have taken a loan here, that needs to be, you know, capitalized. Now again in AS 16, this issue will come. So be careful. I'm referring to AS 16 also. So AS 16 also this issue will come. We'll have to discuss some problem relating to that. The other things that are there, you can read from the material. I'm not going to confuse you with these things because there are certain explanations to all these things that if at all there is a need to look at it, at that time look at it. Now let us come to the important thing of how to compute depreciation. Now, what is important is how many blocks did we see? Block of assets, how many we have seen? Under building, there were how many blocks?
3.
3. Under plant and machinery, we'll come to that. Furniture, 1. And intangible, 1. And in building, how many blocks are there?
5.
5. Because 20, 30, 40 and 45 plus 15. Please don't forget this. What are the internal things we'll see later? Therefore, there are 10 blocks. So what they are saying is, unlike your normal accounts, how do you do? We say plant and machinery 1 block, furniture 1 block, building 1 block. Like that, we do separate blocks. Here you cannot do. You have to plant and machinery is okay. Here you have to separate it in separate buckets. Each one is 20% if it is there, 30%, 40%, 45%, and 15. All separate you have to do. Building again, similarly, 3 buckets are there. If it is there, 5, 10, 40, like that, 3 buckets you have to do. You cannot, even though it is plant and machinery, you cannot keep it together like we do in accounts. That is one of the things that you need to make clear. The next thing, so therefore, depreciation is computed on various assets according to the system of classifying the assets into various blocks of value. The value of each block is taken separately and depreciation is calculated for each block as per set. Each block is what we are talking about. How many blocks are there? 10 blocks. So everything need not come. You may get sometimes few couple of blocks, not always, but you have to keep the block concept. Therefore, what is that? There will be an opening WDV if it's already in existence. Normal WDV, the way we calculate, add cost of acquisitions of the asset, the way we do, no problem. This is all very clear. We do. But again, here you have to understand that put to use, only then we can capitalize. We put to use. That is very important. Now, this is where things go little different. Deduct money, money is received, receivable along with the scrap value, if any, in respect to the asset sold, discarded, destroyed during the period. Now, for example, if suppose an asset we have got in plant and machinery, there are four assets, four number of assets valued at say 8 lakhs. Four numbers are there. Out of that, again you purchased one asset which was valued at 1 lakh. So this is A, B, C, D. You purchase D. Be careful, please understand, because now the total has become 9 lakhs. Now what you do is you sell build plant and machinery C. You sell for 3 lakhs. In accounts, how will you treat it? That you tell me. How do you do it in accounts if this has to be done? In accounts, how do you treat it? Please tell me. What will you reduce from this in accounts? When you're doing accounts, what will you reduce? Venus, please tell me. When you do accounts, what is the value that you'll reduce from the fixed assets?
Depreciation.
Depreciation is later on. I'm saying sale. This is sale. What do you reduce here when the sale is happening? What value you will reduce here?
Scrap value.
No. Suppose the depreciated value of the asset that you have sold now for 3 lakhs, the value you have sold. So the depreciated value is say 2 lakhs. What will you reduce? You will reduce 2 lakhs or 3 lakhs in your books, in accounts. What will you? Sure. Depreciated value only reduce, right? So how do you do it? Basically, bank account debit. Let me write it. To fix the plant and machinery. This is 3 lakhs. Whatever money you got. To plant and machinery, 2 lakhs only. To profit on sale of asset, 1 lakh. This is how you do it normally, right? But in income tax, this is something which cannot be done. Why I tell you? This is not the way to do it. So that's why I'm saying your accounting, you have to forget. Here you don't have to bother how much is this value at all. Don't worry. Just reduce this. That means now 6 lakhs is your balance WDV. That is what I'm saying. Deduct money received, receivable along with scrap value. They're saying money. They are not saying WDV of that asset which was sold. In this case, 2 lakhs. Don't reduce that. They are not asking to reduce it. Entire value of the amount received on sale should be reduced in respect of assets sold, discarded, destroyed during the period. WDV of each block will be 1 plus 2. This is what? This is 1, 2, minus 3. This is 3. Number 3. So 1 plus 2 minus 3 is your WDV. So what you are getting here is WDV of the block. So what did we see? Very important two things. Number one, asset can be capitalized and put as part of asset if it is put to use. Number one. Number two, when you sell an asset, the total sale value should be reduced, not the WDV value with the way we have learned accounts. After once you get WDV of the block, and you have to do block wise, you cannot do fixed asset total. You have to do, say, under plant and machinery, you cannot write plant and machinery. You write plant and machinery, which block? Whether it is 20% block, 30%, separate you have to do all these working. Depreciation is computed on the closing WDV. Closing WDV. So on this you have to calculate depreciation. At what rate? You know the rate because this plant and machinery may be 40%. Maybe. You don't know. It's one. You don't have to separately do it. at the rate of 40%. Now some more things are there. Now read the next one, note number 1. Depreciation on assets put to use in the previous year of acquisition for less than 180 days shall be charged only 50% of the amount at percentage. Now when you do 40%, you have to be careful. This 46 lakhs, 3 lakhs is gone, no depreciation on that. On the 6 lakhs, this 1 lakh is also included. On the 6 lakhs, this 1 lakh is also included. Am I right? Are you clear? Because it's part of addition, right? So this has also come. Therefore, you have to and assume that this was purchased post. I for simplicity's sake, I say because 180 days, right? So 6 months. So post September, that is on 1st of say 5th of October, it has been purchased 2019. Therefore, it is purchased post September. Therefore, it is less than 180 days. Therefore, what we are doing when you calculate it, what is the total 6 lakhs? So, out of 6 lakhs, the WDV, you have to split it up into two parts. One is 5 lakhs, which is from the opening WDV. That will be at 40%. Whereas the 1 lakh which is there, which you have purchased, is used only for less than 180 days. Therefore, only 20% depreciation will be available. Only 20% depreciation will be available because it is used. And sir, no sir, I learned in my accounts, I learned pro rata depreciation. That means up to the date of, from the date of purchase, whatever a date from there, I can calculate on the difference. There is nothing of the sort in income tax. Income tax is saying that whether you purchase it, suppose it is purchased on 5 to 2020, next year there is only 1.5 months left. Still, you will apply the same rule, 20%. Therefore, irrespective of when you purchase, only thing you have to check is 180 days. If it is pre 180 days, post 180 days, either of the two. If you are able to understand that, then we can move forward. Are you clear? You want me to explain again? Because things will get a little more complicated. I'm waiting. Tell me. Maria,
Yes.
are you clear? Should I explain here? 8 lakhs is the opening WDV. 1 lakh is the addition. 9 lakh after that. Now you have sold 3 lakhs. Right. Balance is 6 lakhs. So what is the difference from what we did earlier? Normal accounts. You reduce only the cost of WDV of the asset sold. Here it is not that. You do the entire value. That is a 3 lakh whatever sale value. Therefore you get 6 lakh is the balance. The 6 lakhs again when you do depreciation, you have to go further and prove out of that 1 lakh is an addition, right? That please careful because you're going to do a problem in 10 minutes or so. Therefore, be careful of understanding it. So 1 lakh is your total amount of purchase out of this 6 lakh. Because whatever 6 lakh sitting includes is 1 lakh. So therefore 5 lakhs is from the original WDV because 8 lakh was there, 3 lakh you have sold, then 5 lakhs is the opening WDV. That will be normal rate because from the beginning you are holding. As far as the 1 lakh is concerned, you purchased it only in the month of say, February. You will get 50% of the normal rate. What is the 50%? Normal rate is now 40%. Therefore, you get only 20%. That's the logic. So that's what is written here. So when you do the problem, it will get clear. But there are certain issues. Suppose instead of getting this, you are getting 10 lakhs from that one asset. Therefore, this thing is how much? 10 lakhs is sale value, mind you. It's always possible. Therefore, there is no WDV. WDV is nil. Therefore, there is no depreciation. There is no depreciation here. If WDV shall be taken, cases where WDV, that will come to that. There are certain situations under which, now see, cases where WDV of the block is taken as nil, where there is no depreciation, is where all the assets in the block are transferred, then WDV will be nil. It can happen in the following cases. Sale consideration of the entire block exceeds opening WDV and assets purchased within the year. The excess is taxed as short-term capital. So in the above case, what we are talking about, I'll just use that same example. When all the assets in a particular block are transferred, that means we have now 8 lakhs. How many assets were there? 4 assets. We purchased one for how much? 1 lakh. Now we sell all the 5 assets for how much? Say 10 lakhs. This is 9 lakhs. We sold it for 10 lakhs. Therefore, there is a minus 1 lakh. That is, you got surplus. Therefore, your block is become nil. There is no depreciation. And this 1 lakh surplus will be taxed as short-term capital gain. Number one, there is no depreciation because this block has gone. The entire block is gone. No asset in that. Okay, that is one situation. Next, under this only. Suppose not all the block are there. Some assets have been sold, but it is sale consideration is less than opening WDV and assets acquired during the year, then WDV is taken as nil. Sale consideration is less than the opening WDV and assets acquired during the year. Taken as deficit is taken as short-term capital loss. Suppose you have sold the entire block. So in this case, again, let us imagine the same example. Your opening WDV was 8 lakhs. New asset added, new plant and machinery is 1 lakh. So there are 4 assets here. The one asset you have purchased, 9 lakhs. Less sale. All the 5 assets you have sold for say 10 lakhs. So for 8 lakhs. For 8 lakhs you have sold. Still there is a WDV of 1 lakh. But you cannot charge depreciation on that because the whole block is gone. You have sold it. So this 1 lakh represents no asset. It doesn't represent any asset. Therefore, the entire block is gone. Therefore, you cannot claim depreciation. This will be taken as short-term capital loss. Here, this is where you need to understand. And the last one is where a part of the block is sold and sales consideration exceeds the whole block. There also we have already examined. Suppose not all the assets, only one asset sold, but more than 9 lakhs. Then also the same situation as well. Now, depreciation is mandatory as per explanation 32, whether or not the SC has claimed the deduction in respect of the asset. Therefore, suppose you missed out depreciation in 1 year, you missed out depreciation. Next year, when you calculate, you cannot claim the depreciation is gone. So when you calculate, your WDV has to be adjusted to this. Only in the balance WDV you can calculate the depreciation. Sir, it is not fair. That all doesn't matter here. It is not fair. It's your duty. It is mandatory to claim it. If you don't claim, it is gone. Your right is gone. These are things that are very different from your accounting. That's note number 3, levate imported cars, no problem. Proportionate depreciation also is important. That proportionate in case this was a proprietorship, it has become partnership during the year. Suppose on 1/11 it has become partnership. Because proprietorship will become partnership. Therefore, what you need to do is take the entire period, 1 year, what is for the assets, what is the depreciation. Here it will be that depreciation divided to the proprietorship for how many months? 6 plus 2, 6 plus 1, 7 months. And here 5 months will be charged to the partnership. That's what they're saying, nothing else. Same. Partnership firm to company, proprietorship firm to company, business otherwise on death of the business, all these amalgamation, all this case, it will be done like that. So there's nothing much, but total depreciation put together should not exceed the depreciation that you would have charged had there been no such change. So therefore, total depreciation will change. You divide it among them on the basis of the period. That is what they have told. So I don't want to explain much about it. So you can. Now the last this thing I sent one problem. So let us read the problem first. Are you able to see the problem? Here on my screen,
Yes, sir.
can you see it?
Yes.
This is the second problem I think that I sent. I'm not too sure which one. So that's so this is none of this is not the problem. The first problem you try. The first problem that I've said, no, the first problem that you try. Can you read one of you read the problem? Venus, can you read the problem? I because I'll send it to you the normal copy because it's not typed here. That's why I have to get it typed and then do it. Send it. So, so this is addition depreciation one. This one is the second problem. Anyway, can you read the first problem, Venus? Venus, Venus, can you read the first problem?
Yes, sir. X owns the following assets on April 1st, 2019. Furniture. So, want to read the amount?
No.
Furniture, building, plant and machinery,
Which
plant and
one are
machinery,
you
plant.
reading? No, you are reading the second problem. I'm asking to read the first problem. Read the first.
Yeah, X Limited owns the following assets on April 7, 2019.
Yeah.
Building A, A, B, C, plant A, B, C, D. The company acquires the following assets after April 1st, 2019. Building D, Building E, Plant F, Plant G, Building F, Plant H. The company sells the following assets after April 1st, 2019. Building A, Plant B, Plant D, and
Building D,
Plant C.
building E. Two buildings are there. Plant D, plant F, plant G, plant F, plant H. Then this what next? Have you finished the sale also? Have you read the sale? Venus, Venus, are you there? Venus,
Yes, sir.
have you read the sale also?
Uh,
The company sells the following assets.
Yes, sir. Yes, I read.
Okay.
I read. Sir.
So here, how you to do it, I'll tell you. You should first segregate. Now see, building. So under building, when you write, what are the first ones? 10% block. So 5 is there, 10 is there. If there is an initial, you have to write that. So this is opening WDV, right? 10 is how much WDV you have taken first. That is 10% is 15,75,000. What are the assets here? At first, you can write the balance A and B. 5% is how much? 40,000. Right. Now, next one is what? You can write plant. What are the columns that you need to take? 15%, 40%. Two columns are there. So you take 15%, then you take 40%. Each one stays here because there might be new block can come in purchases. So what is the total of 15%? Can you tell me? What is the total of 15%? 4,500 plus 68,000. 4,500 plus 1 lakh 13,100, and the other one is 38,000. 40%. Add new. So you can write the names if you want for your, if you want to keep it, if you want to be clear about A and B, C and D, like that. If you want, you can write it so that you're clear about it. Add new. What are the new? Mind you, building D, what percent? 10. Therefore, in 10, you have to add 6 lakhs. Be careful with the dates. Only 50 use you have to consider. Building E, 4 lakhs. Plant D. So here you can write building E, building D. Then similarly, plant F, all that you have to do. Then you say less when you sell. You have to reduce the entire value, that is sale value, for building A. Building A is sitting where? Here in this block. Therefore, when you reduce it, you have to write 13 lakhs totally sale value. I'm talking of purchase, like that you have to add each and every one. Sale also you have to reduce the entire value of 13. Building plant B, where is plant B? Here. Therefore, in this you have to reduce 20. Plant D is where? Here. B and C are here. So both are being sold. Therefore, it is 2 lakh 15 plus how much? 32,000. Both put together has been sold. Once you do that, all this correctly, the addition you have to be careful. New block is coming, you have to add that. Then you have to take the WDV. On the WDV, you have to calculate depreciation. And depreciation, now you have to calculate, you have to see when the addition has happened. And that accordingly, you have to take the depreciation for that, which I just told you. So please try this problem. And if you finish that, try the next one also. We'll be back at 8 o'clock. Okay. I'll just leave it here so you can write out. Please do properly, make proper columns and do it. So what I was saying was, what I'm asking is, additional depreciation is what? Apart from the normal depreciation, you get additional depreciation of 20 and 20% of the actual of the new plant acquired after and installed after. Now, my question is, of course, there are certain assets you will not get, like aircraft, second-hand asset, machinery purchase for option not available. But my primary question is, why depreciation is given for this? So what you're saying is, Maria, what you're saying is, get tax benefit. You're right, because by giving the tax benefit, that means when it is coming as an additional expenditure, extra depreciation is coming. Therefore, your profit will come down the book. Therefore, your tax outflow will be reduced to that extent. When it is reduced, for that tax benefit cash flow will be used for the business. That is the reason why it is being done. Yes. So idea is, by giving additional depreciation, all the time it's going to come. The idea is that this will help in getting the cash. Otherwise, money would have gone as tax. Therefore, in order to benefit the business, so that that money can be used for something constructive or construction. That's the basic, for the purpose of the business. That's the idea. So of course, government is using. There's no doubt about it. So let us look at the problem. This is the problem. Problem. Priya, can you just read it?
Yes, sir. X Limited is engaged in a business of manufacture of computer hardware in Rajasthan since 1995. During the previous year, 1920, the following assets are acquired and put to use. So, rate of depreciation, number of. So, should I read
No,
the
no, no, no.
figures?
Just tell me.
Yeah. Yeah, rate of depreciation, number of assets in the block, depreciated value of block on April 1st, 2019, additions of plant new during the previous year 1920, plant A, plant B, plant C, sale of all plants, one plant in each block. Plant A, B, and C are acquired during May 2019 and put to use. Sir, is that use?
Use, yeah.
Yeah, put to use during September 2019. However, Plant B is put to use in the last week of March 2020. Find out the amount of depreciation, additional depreciation, and capital gains.
One thing that needs to be understood here is rupees in thousands. That has not been written. Just take care of it. This is rupees in thousands. Now, first we need to understand what are the additions. The addition is 57 lakhs. On that additional depreciation will be how much? 20%, right? 20%. When was it acquired? For A plant A, yes, here acquired in May 2003. But our plant B is put only in the last week and put to use. This is also put to use. And it is one second. So it is put to use. That means the block B has been put to use only for less than 180. Therefore, first you have to calculate what is the additional depreciation available on this. So 20% of 1,000 what 57 lakhs is how much? Can you tell me how much is this? Please tell me.
Uh, one one lakh for 2,500.
No, you take 57 lakhs in full, thousands no. So this is 57 lakhs
So
into 20%.
14,025 then. 14,025.
So what I was saying was we need to calculate the additional depreciation first. Therefore, if you look at, I'm not erasing because this problem you don't have. That's why I'm trying to write here. Because I'm that common. So here, 57 lakhs into what is the additional depreciation you can get? 20%. Additional depreciation is 20%. Don't take the 15% off. That's separate. Additional depreciation is available at 20%. Right? Therefore, that is how much? 11 lakh 40,000. For the second one, it is how much? 4 lakhs into 20%, but it is only half the year, therefore you get only 40,000. Have you understood what I'm saying? This is 4 lakhs because this is rupees in thousands. This is therefore 400 means 4 lakhs multiplied by 20%. Again, always understand additional depreciation 25%. Some cases there is 35, but at the moment you understand 20%. Divided by 2 by because this 400 was only put to use in the last week of March. And the third one, that is 1700, 17 lakhs into 20%. So that is again full year, no problem. Therefore, that is coming to 3 lakh 40,000. These are the additional depreciation. The additional depreciation. Now, what we need to do is, like we did earlier, we have to calculate the normal value of block. The first block will be this is the opening WDP, right? Then you add this 5700. Therefore, you get how much? 7,500 in lakhs. You have to do it in lakhs. You now 8 lakhs has been how much? 8,000, not 8 lakhs. 8,000 has been sold. Therefore, what is the balance? 74 lakh 90,000 is the balance. How did I get it? I'm just adding the zeros. Minus 8,000, 74 lakh 90,000. 74 lakh 90,000. Now, on this depreciation, normal depreciation, you have to calculate. Why? Because plant A has been full year. This sales 74 lakh into what is the rate of depreciation for this block? 15%. Into 15%. How much is it? Can you tell me how much? 74 lakh 90,000. How much is that? Please tell me. Tell me how much is that value? Marian, please tell me what is the depreciation on this?
So 11,23,800.
Great. Apart from that, you are also entitled to get additional depreciation of 11 lakh. So total depreciation you can gain is this amount for block 1. So let us look at the second block. Please write down if you want. Columnar, if you make, write down. I'll send the question. Don't worry. Today or tomorrow I'll send it. Because I'm just trying to get all the questions together. So I'll send it today or tomorrow. But try to understand the concept that first calculate additional depreciation separately. Then you normally calculate and calculate normal depreciation. Therefore, here is the normal depreciation. This is normal depreciation. And this is additional depreciation. Okay. Now let us look at the second one. I'm just erasing the. If you want, you can copy it down. Then I will do the second part. What is the WDV for the second block? Please tell me what is the WDV. And what is your for the second block? What is the WDV? Calculate. For the second block, tell me what is your WDV.
So what is given in the question?
Not given in the question. You have to calculate it. You have to calculate. Opening WDV is 25 lakhs. Addition is 4 lakhs. Sale is 28 lakhs. Therefore, what is your WDV?
30,000.
30,000. Now depreciation on normal depreciation is how much?
9,000.
No. Because this balance which is there 30,000 is entirely because of plant B which has been put to use in the month of March. Therefore only half depreciation of 30% is there. Therefore how much normal depreciation? How much is 50% of that whatever value?
4,500.
4,500 is your normal depreciation. Your normal depreciation. Aparna, are you listening?
Yes, sir.
So first you have to calculate additional depreciation, which you have calculated here. This is the additional depreciation, this part for this block. Then you calculate normal depreciation, and in this case you got 11 lakh 23, and additional depreciation you are getting 1 lakh 40. This one, 11 lakh 40. That is being added to total depreciation. For the second block, your WTV is how much? 30,000. On that, you have to calculate at not 30% because this is put to use only in the last week. Mind you, these are all in thousands, therefore it will be taken as 25 lakhs. This is 4 lakhs. This is 8 lakhs. Therefore, your balance WDV is only 30,000. On 30,000, 30% divided by 2 because the addition is only because of addition that 30,000. Therefore, your 30% will not be done. 30% divided by 2. Why? Because it's only part of the year. Put to use only in the month of March. But you got additional depreciation of 40,000. Therefore, for block 2, normal depreciation will be WDV is 30,000 multiplied by 30% into 1 by 2 because only part of the year it is there. Therefore, you get 4,500 plus additional depreciation of 40,000. Therefore, you will get 44,500. Now, can you calculate the WDV for this third block? All of you, please calculate the WDV for the third block.
So third one, there is no depreciation.
There is no block.
Yeah,
Therefore, there
there's
is
no
no
blocks.
depreciation. Now, the question is, in that case, will you be getting additional depreciation? Therefore, here block is nil. Therefore, normal depreciation is nil. But you will still get the additional depreciation, 3,40,000. That is the additional depreciation you will get, 3,40,000. As far as capital gain and all is concerned, don't bother it now. Don't worry about it now. Only we are calculating depreciation and additional depreciation. So, Maria, now you understand why you should forget about all those things that we have talked about in the accounts.
Yes.
Because it will be very, otherwise you cannot accept it. You just leave it. Just really allow it to beyond logic in your normal depreciation account. But as always, I say one thing that when you are studying income tax, don't apply logic. It is the law of the land, and you just apply the law of the land. That's the way it has been. Look at it, the way they have interpreted. You try to achieve that. Very difficult because the government, when it does it, there is an intention behind it. That intention will always try to understand and keep doing based on it. Most of the time, will be wrong. But then that's the way it is. That's where the litigation comes, right? That's where the litigation comes that we interpret a particular one in a particular way. The government or the department will interpret it in a different way. Therefore, it leads to litigation. And there also, Maria, otherwise we are not going to be there if there's no litigation. That's why when the notices of income tax and GST are coming, as chartered accountants, we should be smiling. Are you with me?
Yes, sir.
Because more litigation means more revenue. Venus, have you done? Venus,
Yes, sir.
have you done?
Yes. Yes.
Don't sleep off Venus. Today, little sleepy today. Venus, are you little sleepy today? Venus, not replying. Venus, are you sleepy?
No, sir.
Maybe. So, Aparna, where are you?
Uh,
Have you done?
no, sir.
ഇതുവരെ ആയി ഫസ്റ്റ് ചെയ്തോ
Third one, depreciation.
ഒന്നുമില്ല depreciation ബ്ലോക്ക് ഇല്ല അപ്പോൾ there is no depreciation normal depreciation but this 3 lakh 40 will come 3 lakh 40 is how did we do on the addition how much is that 17 lakhs into 20% 20% addition depreciation flat ആണ് അതിൽ മാറ്റമില്ല 50% വേറെ 35 ഉണ്ട് വേറെ situation but not in that. Okay, that's how you get it. So therefore yours for the third one the there will be only additional depreciation of 3 lakh. Okay, so let's move on. I'll send you the question, don't worry. So we have completed this, that's the major thing that we have. Treatment of absorbed, unabsorbed depreciation will come to that little later. Now tea, coffee, rubber, etc. are not there in your syllabus at the moment. The new syllabus is not there, but still I put it because it is there. I have not changed it. Now preliminary expense, some amount you need to understand. Preliminary. What is preliminary expense? It is amortization of certain preliminary expenses certified as the who can claim deduction in company. Person other than a company who is visible in it. Now, expenditure for deduction will be expenditure incurred before commencement of business, which is a new business, commencement of business in connection with the extension of the existing business. Suppose it's an existing business, whatever for setting up a new undertaking, you have to do. Suppose you are totally new, then whatever is the immediate cost of commencement before commencement you can take. But you are already an existing one. Then what happens is you may be starting a new industrial undertaking. For that, whatever is expenditure can be taken. Now, what are the expenses under that? Feasibility study, because if you're going for a new project, you have to do feasibility study. That cost can be considered. Then you got preparation of project report, conducting marketing survey, engineering service, legal charges for company specifically. If it's a company, then only drafting, memorandum of articles, etc., registration and incorporation, expenses related to company. These are specific to company only. In those cases, it will be also considered. other expense. However, point number 8 to be what we have seen should be done by the assessee himself or by concerned in which for the time being only then you. Therefore, what we are looking at is the expenses that are to be considered for the purpose of this deduction. It is not deduction binding, only the expenses that are there, because that is very important to understand. Now let us move on. Now you see expenses qualifying for deduction. Now see what is it? Expenses qualifying for, are you able to see the screen? Expenses qualifying for deduction. Aggregate amount of expenditure as per clause 8, just now we have seen. We are talking of other than company. Whatever is expenditure is qualifying what we saw A to G, take the total. It should not exceed 5% of the cost to the project. So it is limited to 5% of the cost of the project in all aspects. But for companies, there is another check. It cannot exceed 5% of cost of project and capital employed, whichever is higher. So whatever is the amount, you should compare these two, take the 5% of that and do it. As far as non-companies are concerned, this clause is not there. Only this applies to the company. There, that also you have to be concerned, whichever is higher you can. Now, what is the cost of the project? Cost of the project is actual cost of fixed assets, land, building, leasehold, plant and machinery, furniture, railway siding, including development of land and building, which are shown as goods of assets for the last year. So here, that is the cost of project. Now, what about capital employed, which you are looking at here? Means aggregate of the issued share capital debentures and loans. Sir, all this is fine. Now, still we are not reached. What is the deduction? This is only what is qualifying. Once you figure out what is the total amount qualifying for expenditure, then the quantum of deduction will be, which is qualified for deduction amount, 5 annual equal installments. That means total amount divided by 5. In 5 years, you will get. That's the deduction. The deduction per se is very simple. Only the calculation for amount qualified is what is going to take time. That is one thing you need to keep in mind. To avail the deduction, company or cooperative society should get their accounts audited by CA. Otherwise, they will not get the deduction. There are forms for that. Now, the next one is amalgamation in nature of merger. Again, whenever there is a merger taking place, there is a lot of cost involved. That cost, whatever the total cost for amalgamation, for example, now SPT, SPH, all those got merged with SBI. There were a lot of expenses were incurred for that. That expenses will be again allowed 1/5, just like the earlier one. Total expenditure divided by 1. Next one is VRS, certified DDA, again 1/5. But here we need to discuss, we'll discuss in the next class this part, how to do it. Apart from that, you got the next one is prospecting of certain minerals. That means they are trying to spend time to get, suppose, Godavari basin. They are trying to find out whether some minerals are available in the basin. You know, some oil, minerals, etc. So they are spending a lot of money there to find out whether there is any mineral. That's what prospecting. Then whatever is the cost, 1/10 will be allowed, but you cannot get a nil. It will be reduced maximum. Suppose your income is 5 lakhs and your expenditure is 6 lakh 50, then you will not get minus out of it. You will be limited to that expenditure. 1/10 only. That means 65 lakhs you have spent. 1/10 is coming to 6 lakh 50, but your income is 5 lakh. That will be limited to 5 lakh only the deduction. That's whichever is less. So that finishes one part of it. We will discuss problems relating to this voluntary this thing in the next class. And after this, we will be going to the next set of things which are I have not given you. So you have completed the first set. The second set we have basically deduction, other deduction, which is very important. But I will be asking you some of the sections here. So just try to remember. Try to remember some of the sections from here to up to this, you please remember what we have already completed. Up to this we have completed. Now we are going to start from here. So try to remember some of the sections. Okay. So that's it. So we will meet tomorrow with costing. We'll continue with what? Cost records. Okay. The one problem I asked you today, please write. I believe there is one some small thing I asked you. Please write. That is, you are supposed to do cost records and also financial